The Bank of Montreal has kicked off Canadian Bank Earnings Week with a stellar report, coming in way above expectations and driving their stock price to a new two-year high. This has been fantastic, and I'll just go through some of the numbers here. Bank of Montreal reported 194 adjusted earnings versus Street 1.81. That was 5% growth over year. This was driven by a 24% increase in adjusted earnings from their U.S. personal and consumer banking division. There were a couple of things, though, that were mixed about the report that could have implications for other Canadian banks. The Canadian personal and commercial banking business was up only 1%. Loan loss provisions were $256 million, up from $160 million in the same quarter a year ago. Why is this important? Because what it's showing is that U.S. banking, very, very strong. Canadian banking, a little bit soft. Why could Canadian banking be soft? Well, we had a few things. We have the impact of the Alberta wildfires during the quarter. We've generally been concerned about banks' exposure to the oil patch and also about their exposure to mixed housing markets across Canada. Toronto and Vancouver have been red hot, but oil-producing areas such as Edmonton and Calgary have been really, really struggling. So it's a question now of what does that mean for different banks as we go forward, and what it may mean is that the what areas of business the banks are most exposed to could have a significant influence on the results. If we actually look at the Canadian trading in Canadian banks today, 2.7% rally for the Bank of Montreal, 1.1% 1% plus gains for Bank of Nova Scotia, for National Bank, for Royal Bank. However, CIBC and TD are dragging a little bit. CIBC in particular, less exposure to the U.S. banking market, more Canada and capital markets. Nova Scotia's has quite a bit of an international flavor. Royal, however, does have a significant U.S. Exposure as well as TD to a certain extent as well. TD's also got a lot of capital markets. So we'll be looking at this as we move through the week. I'll just start here with the chart for Bank of Montreal. I mean, Canadian banks have been going sideways here for the better part of 2 years. Since the summer of 2014 right through, they've pretty much been range bound. However, over the course of this year, we have seen some gains steadily improving in the Canadian banks, and look at this gap open and break out to a new two-year high. We're also seeing RSI accelerating as well. So certainly a strong move here for Bank of Montreal. We'll see how does that play out in some of the other banks. Well, if we look at Royal Bank, is also repeating this, breaking out to a two-year high of its own. However, if we look at CIBC's chart, we'll see the gains are here, but they are a little bit more subdued. CIBC's been underperforming and trailing a little bit. If we look at TD, we'll see that that's also picked up a little bit, but basically still trading well short of its 52-week high. And finally, Nova Scotia, we'll see here, picked up a little bit, but again, it's picked up a little bit here as well. However, it does have some work to do, so we'll see what happens when their results come out next week. So in terms of banks reporting, on Wednesday we have Royal reporting. Street is expecting 170, which is about a 1% increase over year. On Thursday we get CIBC and TD. CIBC expected to report 234, a 4.3% decline from last year. So expectations are pretty low for CIBC. TD, Street's expecting 121, again up about 1% over year. So if these banks can get anywhere close to Bank of Montreal, we could see some upside surprises here.